If you already own a home in Kamloops, this market might be the best time to upgrade in years. Move up buyers have more leverage right now than they ever had in a very, very long time, but almost nobody's using it properly. If I was looking to make a move up in 2026, I wouldn't be waiting for the perfect headlines. I wouldn't be trying to time the market, and I definitely wouldn't be guessing. I'd be trying to build the perfect strategy for me and my family. Because moving up isn't about predicting where the market is going, it's about understanding how to play both sides of the transaction at the same time. So today what I'm going to do is I'm going to walk you through exactly what I would do if I was looking to make a move up in 2026. No theory, no hype, just strategy. If we haven't met yet, my name is Scott McDowell with Kamloops Home Team. We've been helping families move up, down, and across the city for nearly 2 decades now. And what I can tell you confidently is that move up buyers right now have more control than they think, but only if they approach it properly. So if you are thinking about making a move, my team and I would love to have a chance to sit down and discuss the best plan and strategy for your future. All right, this is exactly how I look to make a move up in today's market. First, I would definitely take a look at my equity position, not starting on MLS. Most homeowners make the biggest mistake for browsing listings first. They start taking a look at kitchens, they start taking a look at yards, new build construction, different neighborhoods. They get emotionally attached to something before they even understand their numbers. And that's completely backwards. Before I even took a look at a single property, I'd try to figure out exactly what my home is worth in today's market, not the peak pricing, not what the neighbor sold for last year, today's realistic value. And then I would calculate exactly what I would net after mortgage payout, any real estate fees, any legal fees, and any moving costs. And then I would ask myself a very important question: what monthly payment am I truly comfortable with for this next move? It's not always what the bank qualifies me for, it's what fits for my lifestyle and allows me to sleep at night. The clarity tends to remove some stress, whereas guesswork creates a lot of pressure. And once you know your equity in position and your comfort zone, you can definitely move forward a little bit more calmly instead of emotionally with your purchase. Secondly, I would definitely focus on the spread, not the price. Move up buyers often obsess whether the market's up, whether the market's down, but truthfully, you're not just buying in this market, you're also selling in it as well. Okay, so let's say your home is worth $600,000 and you're looking to make a move up into something maybe in the $800 or even $1 million range. The gap between those two properties is what truly matters, and that's the spread. So if the market softens 3% or even 5%, your home might sell for a little bit less, but you also have to buy more expensive property at slightly less of a cost as well. And usually that's a whole lot more money than your current home. So what we're noticing right now is that these softer conditions actually benefit the move up buyer the most. Yes, you're upgrading in price tiers, but the lower price tends to hold their value, which is the home that you're selling, and tends to have a little bit of a higher demand than the higher end market. So your house might drop $10,000 to $20,000 on your current house, but your move up house now might be worth $50,000, $75,000, or even $100,000 less than a year ago. So that spread is the opportunity to definitely take advantage of today. So instead of asking, is the market up or is it down? I'll definitely ask, what does the spread look like today compared to the most recent couple years or even last year? And that's where the true opportunity lives in today's market. Third, and probably most important, I would decide whether to sell first or buy first based on my risk tolerance and based on the market for my specific house and the market that I'm looking into the next house. So this is where there's absolutely no universal answer, and everybody's situation is different. Everybody's risk tolerance is different. Their home that they're selling is different. Their purchase is a little bit different. There's a lot of variables that do come into play. So if you are looking for a little bit more certainty and actually know what budget, considering what your home actually sells for, I would definitely look at selling first. Then you can, and possibly negotiating a longer possession date, and definitely lock in your numbers and find out exactly what kind of money and what kind of budget that you have to shop, knowing exactly what you can spend on your purchase. That confidence also allows you to negotiate a little bit stronger if you have your home sold and you put a stronger offer on your purchase. A lot of times those people can be a little bit more flexible when you're offering on something when you have a firm sale on your house compared to maybe throwing an offer conditional on selling your house. So you tend to get a little bit of a better deal if you've had an offer on your house compared to still having to list your house. Maybe your home isn't even on the market yet. Maybe you still have to prepare your house and everything else as well. If I had some flexibility and a strong equity position, and a property that I knew would definitely attract a lot of demand in today's market and in any kind of market, I might consider buying that next property first, as long as you have the right protections in place. Make sure you have your financing in place, or you maybe make a conditional on selling your house, and then also making sure that your house is fully prepared to go to market if you find that perfect house. Put an offer on that place, and then your house is ready to go to market the next day. But one thing I definitely would not do is casually overlap both without a plan. This is where the stress builds up. This is where families tend to feel a little bit squeezed, a lot of big stressful situations. And this is where buyers tend to overpay because they tend to feel rushed on their next purchase and definitely feel a little bit more rushed on their sale. So this sequencing decision is a lot about your personality and your personal comfort with risk. I'm actually going to be doing a little bit more of an in-depth video on this soon, so make sure you subscribe to the channel, or better yet, if you're looking to make a move soon, make sure you call us for a tailored plan for your personal move up. All right, number 4, what I would actually do is I'd actually take a look at some leverage and targeting leverage, not the hype. A lot of brand new listings can come onto the market, create a lot of urgency, and sometimes even a lot of competition, sometimes even some multiple offers. But if I were actually looking to upgrade, I would actually focus on where the true negotiating power exists. In this market, that often means looking at homes that have been sitting on the market for 30, 50, even 75 days, just long enough that the seller starts to be more realistic, but yet so short enough that to show that the property isn't fundamentally flawed and that there's actually not something truly wrong with the property. This kind of target is where we tend to find that the flexibility starts to show up. This is where the major price adjustments tend to happen and are a little bit more likely, and a strong offer with some smart terms actually win in today's market. The emotion can be expensive, yet strategy can be actually pretty profitable. 5th, I would actually look at buying for durability, not just the finishing. When people move up, they often get distracted by a lot of the features, the bigger kitchen, newer builds, some higher ceilings. But if I were upgrading, I'd focus on 3 fundamental things: the neighborhood stability, the floor plan functionality, and the house style and the demand for that specific house style. First, I'd be looking at neighborhood stability. Is this an area that consistently attracts families? Is it in high demand? Does it have access to good schools, parks, amenities? Is it close to shopping? Is it close to restaurants? Has it held this demand through various different market cycles? You want an area that will perform both in strong markets and also in selective markets like we're in right now. Second most important thing is the floor plan. The layout matters way more than the square footage. I've definitely seen some 3,000 square foot properties that felt a whole lot smaller than 2,200 square foot properties. I would definitely prioritize, take a look at where the bedrooms are oriented. Is it grouped properly for kids? Is it an open kitchen, a nice flowing living space? Does it have some storage? Does it have parking? Does it have a usable yard? You can always repaint and you can always replace some countertops, but a bad layout can always be expensive to fix. And finally, if I were upgrading in this current market, I would definitely be looking at a 5-year horizon minimum. I definitely wouldn't be considering a move up if I thought there was any strong chance that I need to make a move in 12 to 18 months. Upgrading should definitely be a medium to long-term decision. The 5-year cycle ends up smoothing out the real estate cycles. It absorbs a little bit more volatility. It definitely allows your lifestyle to upgrade to where it actually makes sense. Whereas the short-term thinking can actually create some additional risk, whereas long-term thinking can actually create some stability. Now, here's where most move-up buyers quietly lose their most money in today's market. They focus 80% of their energy on their purchase and only 20% on maximizing the sale of their current home. And that's completely backwards. If you underprepare your home, or you underprice it, or you launch it poorly, you can quietly leave tens of thousands of dollars on the table. And that lost equity actually hits twice, as it reduces your leverage on your next property. The move-up process definitely starts with maximizing your sale, because it can actually be the true foundation for everything else. And if I wanted to make a move up today, right now in today's market, I definitely wouldn't be waiting for perfect certainty. I wouldn't be trying to predict the headlines, and I definitely wouldn't be guessing. I'd be trying to create a clear plan for my family. Upgrading homes really isn't about chasing the market, it's about understanding where you stand in it. And once you know your equity, once you understand the gap between what you're looking to sell for, and what you're looking to buy for, once you have a clear plan for sequencing everything out properly, moving up stops feeling a little bit risky and starts feeling far more manageable. If upgrading has even crossed your mind in the next 6 to 12 months, the smartest first step isn't scrolling listings late at night, it's about getting some clarity on your numbers. So if you're looking to understand where your home realistically sells for in today's market and what that means for your next move, make sure to reach out to my team and I today. We're happy to help you walk through every step of the way. And if you found this video helpful, or if you know somebody else looking to make a move up, make sure you subscribe to the channel or share this video with a friend. Make sure you check out our video next week, as we'll be discussing whether you should buy first or sell first in today's market. Thanks again for watching. We'll definitely catch you on the next one.